right? This has a high, I'm not even gonna lie, this has a high 1%. So now let's say the market, right, is going up. As you can see, it's going up, going up, going up. Now, what can potentially happen? What is a rejection, right? So what does it look like? A rejection will then be, right, a red candle going the opposite way, right? And then you'll see where after that rejection of a specific area, zone, or level, right? And then we have the closures for our rejection and closures. The next candle, you'll see something like this. This is how our entries will look, right? If we're looking for sells, right? So on and so forth. If we're looking for buys, it will be the opposite way, right? So if it's selling, you'll see something like this. And then you'll see once it reaches, right, a key level or zone within the trend, you'll see it, right, a rejection candle going in the opposite direction. So now for a buy, it will look something like this. All right, and we'll be all of this will be based off the 4-hour time frame, which will give us a lot of strength and basically be able to allow us to catch big moves in the market. So you can see same exact thing for here. So this is how the entries will ideally basically look like. All right. So that's how we're going to be. That's basically what a rejection is. All right. And y'all, and all of these are recorded so you can watch this back. Right. And I also, I believe I sent a picture, an image of what a rejection looks like. Also, I could send it again. And I don't want you guys to not take what I'm saying 100% literal. All right. So what I mean is that it won't be 100% perfect. So it won't just tap the level and then just drop. Right. It may go up a little bit above the level and then reject back below the level, if that makes sense. So let's say, for example, right here, right? So I'm going to show you guys some ideas, some examples of what it is, right? So essentially, this right here is what a rejection is in the market, all right? And now, even so, I believe I called this trade out in the channel right here. Once the market came and made this rejection right here, so you can see we're looking for buys, right? So you can see the idea that I just created right here. So you can see when the market's going down, create a rejection above the level, continue. So you can see down, 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 rejected, closes above the level. I call the entry right here. Literally right here. What happens? The stop loss will go below, called it below the low. And then now this is how we're going to be able to catch, right? 1,000, 2,000 pip moves, so on and so forth. But now what happened is this is the trend. So you're going to see how, right, identifying the trend, utilizing these key levels, which is every $25 in price when it comes to gold. And you're going to see how it reacts. So you can see price came down here, right? It didn't exactly touch it and then shot up, right? There's times where it will dip below it, right? And then now you can see this candle came, close. Then now this would have been an entry for the next candle right here, right? But now it's like, all right, cool. Let's say we didn't catch this right here, right? But we see that the market is starting to shift bullish, right? So now it's like, all right, we're not gonna miss. We're not gonna miss it, right? The market's just not gonna keep going up forever and ever and ever and ever and ever and ever and ever, right? We have to see some type of pullback and retracement, right? And how we're able to identify when the market could potentially meet the bottom of that retracement is basically a rejection candle going in the opposite way. So I literally called this out. I know I had a couple of my friends that actually took this and made some money off this, right? So this right here, so like let's say like this setup right here that I called, like this right here can be, this is considered an A plus for me. Like this is an A plus. Like this gets no like this is like what you 100% like want to see. Like what the strategy that I'm basically teaching and showing you guys right now. This is basically what you want to see. You see you have a you see you have the structure, which is buy, right? Which flip bullish, right? You have the structure, right? Utilize the key level. So we have this key level right here. So you can see how it dipped below it, but then right after the next one, it came close below, right? We want to wait for that rejection, right? We want to wait for that rejection, which I showed right here, right? The market's going down, right? You see how it dipped below? It dipped below the level, and then what it did, it came back, reclaimed. Then now you enter, and you take the market up to the next wave, right? Which is the way gold is moving now, is moving 1,000 pips at a time, right? And I'm not saying, right, you're not going to basically be looking for something like this every single day, right? You want to be patient because one of these moves right here, 1,000 pips, right? Even with a, let's say, a 0.01, right? Let's say 0.01, right? 1,000 pips will equal $100. 0.10 thousand. 1.00 standard 10,000. So it's like, let's say, all right, so it's like, all right, let's say I just take, let's say last week, right? And this is what I'm saying, that you don't have to rush early on in the week to find a trade. So you can see the other indicator that I have on, it tells me the days of the week. So if you look up, it's basically something that's called Lux Algo sessions. It's free. You can add it. It will tell you the sessions of time, like London session, New York, but it'll also tell you the day of the week. So you can see, let's say this was the only trade that I took for the week. This could have been the only trade that you took for the week. But let's say I entered, right, a 0.10 and I made 1,000, right? I just made an extra 1,000 from the week by just taking one position, right? One position. Or let's say I take a 0.01. I made an extra 100, right, for the week by just taking one trade. I didn't have to look all day. I didn't have to take trades. But now, to really, right, show you guys is like, all right, all right, I see a rejection. All right, I enter. So it's like, how do I know where and when to exit? All right, how do you know when and where to exit? So just like what we talked about, all right, these key major levels in the market that are measured at every $25, these can be measured as take profit areas. So let's say I enter here, all right, which is the entry. The entry was 4,050, right? Stop loss below these lows, right? So now take profit one can be the next quarter point or key level, $25 in price, right? 40.75. So that could be take profit one. Take profit two can be 4,100. Take profit three, 41.25, so on and so forth, right? So now you can use these levels as take profit areas in the market. So like, let's say, all right, I have a 0.10 lot size and we get up here to take profit one. I can take partial, so I can take 50%, right? I can edit my lot size from a 0.10 to a 0.05, then I can let the rest run, right? I can let the rest run. So it just all depends on what it is that you're looking for. And another thing that I learned on how to basically predict, when it comes to swing trading the next wave is, so let's say we have, I'm gonna clean some of this up right here. Clean up some of these arrows. So the next thing, how I'm able to also predict my take profit points is after, right? You can see we have this shift in structure right here. What you can do is you can clone it. And this will basically determine, right, the next wave up, if that makes sense. So if this first wave was, let's say 1,300, 1,400 pips, okay, the next wave should be equivalent or even more, which is, as you can see, around 1,500 pips. So that's another way how you can determine your take profits when you're trading off the 4 hour. What's good? Yo, what's good, bro? My fault. Just seeing it. Chuck, what's good? How you been, bro? It's been a minute. I don't know if you're still in here. Probably not, but my fault. But yeah, so this right here is like an A+ setup for me, fam. All right. So this is what we're doing right now. But all right, so I'm gonna clean some of this stuff up in the chart.